Hi everyone, welcome back to the channel. I'm Steve Nazon, and today we're going to talk about the process of buying your first home. You've saved some money, you're probably tired of paying rent, and you decide, hey, let me just buy a house. But where do I start? There's a lot of different things you need to know about buying a house. First things first, getting what's called a pre-qualification letter. A pre-qualification letter is a letter from the bank stating how much money they're willing to lend you for a home based on certain assumptions. There are three important people you're going to need to hire throughout this process. One, a real estate agent. Two, a real estate attorney. Three, a home inspector. In this video, we're going to talk about each one of these people and their roles. Do you just go with the best interest rates you see online, or do you hire a mortgage broker? Your next question may be, what is a mortgage broker? A mortgage broker is someone in the middle who puts you, the borrower, and the bank together to get a mortgage deal done. In my opinion, you don't need a mortgage broker. It's just going to be an extra expense you end up paying for at closing. I'd only recommend one if you don't want to put in the time to find the best interest rate possible, or you have some type of credit situation. Next item on the list is credit. This is going to dictate what your interest rate is going to be for the life of the loan. If your credit score is above 740, you qualify for Tier 1 lending. You're going to get the best mortgage rate possible, and you're not going to pay any points because you're low risk for a bank. If your credit's okay, maybe a 690 to 730, you're still going to qualify for a pretty good mortgage. You just may have to pay an additional fee. If your credit sucks, I recommend that you don't buy a house at this time. Fix your credit first. You can still get approved for a mortgage, but the bank's going to eat you alive in fees, higher interest rates, and points. I was talking to one of my friends looking to purchase their first home. They don't have the world's highest credit score, so when I asked what her interest rate was and she said 5%, I ran the math for them and let them know over a 30-year mortgage on a $250,000 house, you're going to spend an extra $48,000 in interest compared to a 4% interest rate. I advise them, get your credit score higher and then buy the house. Now you've talked to the bank. They've run your credit, you've given them 2 months worth of bank statements, 2 months worth of pay stubs, and now they issue you that pre-qualification letter. If the amount seems high and you have good credit, you don't have to buy a house that expensive. My first house, I was approved for $475,000. I only spent $277. Next up, finding a good realtor. You should actually speak to a few realtors and go with the one that actually cares about what you actually want. I still find it weird that 95% of the realtors that I come in contact with don't even own a home. If I'm going to buy an investment property, I'm going to work with a realtor who owns investment properties. If I'm going to buy a single family home, I'm going to work with a realtor who owns a home. If you're renting, you don't even own it. Now you start working with a realtor, you go to a property, you see it, you like it, you want to put an offer in on it. The real estate agent, he's going to go ahead, he's going to draw up the contract, you're going to sign it, he's going to submit the offer. If your offer gets accepted, then you go into attorney review, and that's when the attorneys are going to start drawing up the additional terms of the contract to protect you. I personally love a lawyer who's very cut and dry. Someone's going to be highly responsive and answer all of my questions, as this is going to be the biggest purchase of your life. Disclaimer, every state has different real estate laws, so I'm only going to be supplying information regarding the state of New Jersey in this video. In New Jersey, attorney review is typically 3 days. This is where both the lawyers, there's a lot of back and forth stuff. They're adding additional terms to the contract to make sure that their clients are protected. And once everyone agrees and signs off on that, you're officially under contract. The buyer, you, will put down an earnest money deposit. This is typically $1,000 to $2,000, and the next part of the down payment is typically due within 1 to 2 weeks. Now you have to hire an inspector to inspect the property. You usually have to do this within the first week of being under contract. Never buy a property without a home inspection. You're just asking for trouble. The inspectors will come out and do exactly what they do, inspect the property. They'll have a full report for you and your attorney within 1 to 3 business days. At this point, if anything is found on the inspection report, you and your attorney can either ask the seller to repair the items or issue you a credit for the items he just doesn't feel like resolving. Make sure you hit that like button. This will greatly help my channel get promoted through the YouTube algorithm. And don't forget to subscribe and ring that notification bell. The bank's then going to hire a third-party appraiser. That person's going to come out, they're going to take pictures of the houses, and then they're going to run it against other homes that are of similar style in the neighborhood and come up with an accurate value of how much the home's actually worth. This makes or breaks a lot of real estate deals because the bank is not going to lend you money for a house if the house isn't worth the value that you're paying for it. If the house does appraise, then you move on to the next step. Back to dealing with the banks. If you made it this far, they're going to be asking you for everything with the exception of your firstborn. And if you have any questionable items on your credit report, you are going to be asked about it. They're going to look at your debt to income ratio. They want to see how much money you have coming in versus how much money you have going out. They're going to have you fill out a form so they can obtain the copies of your last 2 years worth of tax returns. If you have any additional income that does not show up on your tax returns, it doesn't count. Trust me, I've been there. They're also going to question if you have had any large deposits in your account in the last 60 days. They will flag it, and I think they do that just to make sure, the money isn't being laundered. Now that you've managed to survive that portion, you're going to get your pre-approval letter. This basically says, based on everything you've supplied to them, you're approved for the mortgage. Don't be stupid and max out a credit card or try to buy a loan before you close on your house, because they will flag it, and this can actually get your loan canceled if your debt to income ratio is now out of whack. Meanwhile, back at the lawyer's office, they're going to be taking care of the title search and title insurance and so forth. They want to make sure that the title is free and clear so that the seller's great-grandkids from, somewhere else can't try to come and claim the house for themselves. Once the lawyer's work's been done and the bank's work's been done, they're going to issue you your mortgage commitment. Now you're almost at the finish line to getting your home. Closing day. You're going to do a final walkthrough of the property. That means going back to the property, walking through it, and make sure it's in the same condition the last time you saw it. My lawyer told me a crazy story about a pair of clients he had who skipped the final walkthrough. They showed up to the closing, they signed for the house. Unbeknownst to them, the house actually caught on fire the night before and burned to the ground. So now they signed for a house that didn't even exist. That had to be a legal nightmare. Anyway, back to the closing. You're going to bring any remaining money that you may owe towards the down payment, and you're going to bring a check for the closing cost. You sign all of your papers and you get your keys. Congratulations, you're now a homeowner. Also, I love comments and interacting with my subscribers. If you have any questions, please feel free to comment below. Thank you for viewing.